Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. We'll talk about the US30 in this video. So a lot of questions regarding this setup today that I did take. So coming back to the process, we have a market that on our Monday defines our opening range. We had a false break or a failed breakout of Friday's low on our day one. So again, I'll just mark this for traders to see. And Friday was the high of the week. So if we back this up, Wednesday, pretty much in line with our low of Monday, that formed our peak formation low that took out the low of Monday and started our day count on the upside. That was our Wednesday, day one, day two, day three on Friday. And that market put in a peak formation and then broke down on Monday below the US session low, the low of the day. That market reversed before collapsing into the close and becoming our first red day. And we talked about this on the other indexes, but you'll start to see the pattern here. Higher high on a Friday. They dump it down, break structure on the inside, and collapse as a first red day. And that gave a high of the day, high of the session trade in the Europe-London window. So again, a first red day collapse in the Europe-London window that broke outside of the previous day's low. So we went down and made a lower low. So we redraw our levels. There's our consolidation. Again, I'll repeat this over and over. We draw our consolidation heading into the new day. If they expand it, so be it. We redraw those levels. They broke outside of our previous day's low. Now remember what starts our day count. So important to understand this. Outside, a failed breakout. Not just a false break, a failed breakout. A market that trades outside of the range. So they put a high of the day in place and continued to trade back to that high of the day on the Friday before collapsing into the end of the session. We've seen this pattern over and over and over on several markets where they will do the same thing. High of the week, high of the day. They trade back up into it after breaking structure at the low of the day, pump it up, and then dump it into the new week. Monday takes out the low, triggers breakout traders. So again, understanding the psychology. They trigger breakout traders before pumping it up and dumping it down. First red day is a sell high, high of the session, high of the day. And that market then proceeds to make a higher high into the open of our US 12 candle window, higher high on the inside on a day three. Formula for the dump and pump, same as it is if it's a lower low on a day three up high for the pump and dump. And we'll talk about that in 1 second. So remember this, higher high on the inside, down low, formula for the dump and pump. First green day, that forms our first green day without taking out the high of the previous week, but it takes out the high of our opening range. First green day is a buy low, low of the day, low of the session, buying opportunity. We have a first green day. We had the Fed last night, and this market rocketed it up on the Fed. Not interested in trading the Fed. I wouldn't even want to go there. Just not interested. I mean, there's plenty of great opportunities in the regular sessions, and I'm not on the screen at that time, but that closed also as an up day. Now, we have our day one. That's the failed breakout at the low of the week that establishes our new day count. So again, the failed breakout from the previous day's low. We have peak formation underneath, right? Peak formation on top, peak formation underneath. Starts the day count back up, day one, day two, day three. Now here's where traders have had some questions regarding does that restart the day count? So remember, we've gone higher and pulled back. We have a failed breakout, but we don't have any volume trap. Notice the difference when we have volume that goes outside of the box, outside of the previous day's higher low, outside. That's what starts our day count. This is a breakout that pulls back. Now we don't know, this could be our failed breakout, but what it needs to do before it's a failed breakout is take out the low of the day, unless we have volume outside that closes as a first green day, first red day, or back inside of the breakout. This is a false break. So we go and we do our process again. We redraw our consolidation. There's our high, there's our low. I repeat, we draw our consolidation every single day. If we don't have one, this is the consolidation heading into the new day. The high of the day, there's the top of our consolidation. And the most recent swing low from the consolidation is down low until they reestablish that range. That gives us our new high and low. We have a market now, though, that has broken out of the high of the week and pulled back. This high bull may be a level of potential major resistance. But we get a lower high in the London session that breaks down and gives a break in structure, which I noted on the community page, on our YouTube community page. That lower low and lower high is the formula, as I said over here. The formula for the dump and pump on the inside, the formula for the pump and dump on the inside. This becomes our new lower high of the day. The London session puts in a lower high, and lo and behold, the market began its pump up into the high of the day. Now, you've heard me talk about front side, back side. This is the easiest thing in the world to do. Traders say, I didn't know how to get in. I didn't know how to get in. Front side, back side. That's it. As soon as you see a trend line break, okay, we may have an opportunity. The big thing to understand about this particular setup is that there is no major red news on the calendar, which means if I get a setup, I'm going to hit the trade, because there's no reason for this all of a sudden 15 minutes later to go vertical up against me on a news release or anything else and take out the high. Or, we have our lower high, lower low, break in structure. We've already broken out of the high of the week. Something else I had mentioned in the post earlier in the week was that the previous week was an inside week. So we had week 1, week 2 inside week, and then we broke the high of the inside week after making a lower low on our day 2. That break in structure on the inside gave us the anchor point for the pump and dump, day 1, day 2, day 3. We broke the high of the week on day 2. So traders understand we triggered inside weak traders up top. We've triggered breakout traders. So if this was to fail and roll over, we have weekly, daily, hourly, 4-hour traders potentially trapped on the breakout of the high of the inside week. But remember, the opportunity here may just be from high of the day, high of the week to low of the day. This is over 100 pip capitulation. So there are two opportunities. First entry is on the breakout candle itself. The market's already broken down. Thesis is that this is going to go right through the low. And there's a second opportunity here for traders who want to trade the first bounce. We get a 3-bar consolidation for a second continuation. This is a momentum trade for a vertical explosion. Pump and dump, escalator up, elevator down. As soon as this market proceeded to go 3-bar reversal, I closed that trade. This is whether this market was to go down again, consolidate, pull back up, go into the end of the session, I have no idea. I didn't care. This was an easy, explosive 100 pip move that was over in less than 15 minutes, and I had a max stop on this trade of 20 pips. The whole point of this trade is that once this market collapsed, it should not come back. All of these higher level longs are caught. No news on the market. We're on day 3 up high. They've already triggered the breakout of the high of the week, and we're at major quarter levels for a possible beginning of a reversal trade now. So we have a first red day and payrolls tomorrow. Again, no idea. Don't know how this market will set up. We could see it retest the high. I don't know, but we have a close of the market that is below the open, and we've already triggered a false break of the high of the inside week. So again, the process, I'm just scouring markets. Great question from a trader. Why did I pick this one as opposed to the other two? Very simple. We're still on the front side on the NASDAQ. We have a market that broke out day 1, day 2, day 3, broke out on the Fed, and is still going higher. We see the reversal happening into the close of today's session. The S&P is the same. This is an hourly chart. We're still on the front side of this move. What this market could easily break down. But the distinguishing difference between these markets, these indexes, was the fact that we have broken the high of an inside week. We have a market that is essentially, by all accounts, in a trading range, but we have a false break of a high of a week. We had a 3-day setup, a break in structure that gave a textbook pump and dump trade setup into the New York Open. Alls I am looking for are best trade setups. I am not interested in trying to read every little micro movement back and forth. This was an opportunity to position myself in for a collapse that was going to be potentially fast and furious. Break in structure, pump and dump. Textbook best trade setup for a session trade. And again, every single opportunity is unique to that day, that session, that template. We could have a textbook perfect template that doesn't set up in the session. That was a perfect setup. It behaved exactly as it should, and it was over fast. Keep it simple, traders. We'll talk to you in the next video.